Welcome to the podcast. I'm Eric Salzman, joined with Richie Bennett and Kevin Doherty. Hi, guys.
How are you?
Hello.
Good. Well, we got some sad news to report that just hit the wire. Chuck Norris has gone. He passed away in
Oof.
Hawaii at the age of 86, and it's a big one. He was definitely one of our heroes growing up. I remember when he did the movie. What was the movie he did with Bruce Lee? Was that Enter the Dragon?
Yeah, I think so.
And somehow Kareem involved? Kareem
Yes.
Abdul-Jabbar was fighting in that one too.
And Kareem was not a slouch. He was not.
No.
He didn't have to have. He couldn't get a stunt double to do him. Who's 7'3", but he actually used it to help him, recover from injuries and stuff on the basketball
Yeah.
team. He was
Yeah.
a big martial arts guy.
All right. So
I
Kevin,
actually met Chuck Norris about, let me think, almost 30 years ago. He was the part owner of a casino in Moscow,
Right
in
on.
Russia. Yeah, and it was that was was there more than once. Let's just leave it there.
all right.
Was
But
it a Western motif? Did you have to wear cowboy hats and
No, it was just it was a room with, it was a pretty nice place, and there were a bunch of casinos back then, there in Moscow, and this was probably the most popular one, I'd say. And a lot of the expats who were living there, a lot of the bankers would go and hang out there. And I remember one night actually, stayed. I was on a heater, so all my buddies had gone home, and I stayed till, God, I don't know, 3, 4 in the morning. And
Okay.
this is a work day. And so I was not on time to work the next day. Let's put it that way. And everyone was very upset. But I stopped off at McDonald's and bought a couple big sacks of Egg McMuffins and handed them around the trading desk. And that
Soothe things over.
soothed things over. Yeah. But
so
yeah,
was uh,
he's
so was Chuck? He would come around and press the flesh, say hi to customers and stuff.
yeah, he was there. He was there regularly, and it was, the Chuck Norris Casino, and
What do you think the
the
story was?
Russians loved
How,
him because they were big into martial arts, and
what do you
so
think
popular
led
enough.
Chuck? It seems like a really kind of bizarre path that must have been weaved to for Chuck to end up having a casino in Moscow. Did he have a casino anywhere else, or was this the?
I Not that I know of, um, but they were Moscow was a wild town back then, and
Mhm.
I don't know what else he got up to when he was there, but you can get up to pretty much whatever you wanted.
Right. All right. Well, it's a loss. Um,
Yeah.
So let's talk. I wrote a piece yesterday and it's more. Let's talk about. The piece was called "When a Liquidity Problem Becomes a Solvency Problem," and I just want to get your guys' take on it. And we were talking about with private credit. We've been talking about Blue Owl. They obviously had a liquidity issue that they're dealing with. And then I saw yesterday in on Bloomberg that Cliffwater, which is about a $32 billion private credit fund, similar thing where S&P actually downgraded them, downgraded the outlook. So they didn't take the ratings grade down, but they went from stable to negative, which I assume that means you're kind of on your way to getting a ratings downgrade at some point. And you know, the problem I see is that they have a whole bunch of illiquid assets that are not designed for, large redemption requests, which is why they have a gate of 5%, saying you can only take out 5% at a time. And apparently with Cliffwater, because they've been identified as, a firm that has a very sizable percentage of what they have is software. And I saw earlier this week, John Zito from Apollo came out. I think he made these comments at a UBS conference about a month ago that were not reported on, but they were reported on now. And he basically said these things are worth 20 to 30 cents on the dollar. Like he just went through all the different smaller software companies, and he basically say people are kidding themselves if they think this stuff is going to, it should trade at par. And he was like below 50 when he was talking about kind of where these things should trade. So um, the and one of the reasons that S&P said we probably would downgrade you is if you move that redemption. So Cliffwater, they said the redemption requests were about 14% of the entire fund, which is big. And I believe they put the gates down, but they want to move the gate as opposed to 5% cap to 7%. And S&P is, so you're starting to see the story, and the story is like, if you do that, you're going to create this spiral that's going to basically, you're going to keep selling. You're going to have to start selling assets, and you're going to sell the best assets you've got, and by the end, you're just going to be left with garbage that is priced at 30 to 40 cents. So it seems like, and we've seen this before, guys, and tell me if I mean, think about Bear and think about Lehman, and think about the other guys if they weren't given bank charters or put into, like Merrill being put into Bank of America. Um, it was a liquidity crisis that turned into a solvency crisis, meaning everybody wanted their money out. And with Lehman and Bear, it was commercial paper. It was like and hedge fund money that was there, and all these guys had the ability. Well, hedge funds wanted their money back, and commercial paper guys just say, we're not going to re-up for another 7 days of commercial paper with Bear or Lehman, and all of them really. And that liquidity problem became eventually the solvency problem. And I just have a feeling that that's kind of where we're going, is once it starts, it can't stop. It becomes this kind of, and you guys tell me if you agree, it kind of becomes this, self-fulfilling cycle. You sell more assets, you take more losses, you basically, every time you sell an asset lower, the rest of the portfolio gets repriced lower, and then it just kind of becomes suddenly you still have these borrowings, but you have less capital, so you got leverage issues, and then S&P downgrades you again, and then it just goes from there. But just want to get you guys' thoughts on that, and maybe kind of other things that we've seen historically, that kind of mirror what's going on today. Or I might be being too dramatic, and too worst case scenario, but it feels like this is something that could happen.
Well, thinking about how we talked about this for a bit, and we kept saying how when, the cockroach statement came out by Jamie Dimon concerning, where he said that if there's one cockroach, there's usually many. When Blue Owl first had some problems and First Brands was in trouble, Jeffries was involved, other places. And that was during a good market, right? Like we were at all-time highs. Now we are not at all-time highs, although not terribly far. But as we keep speaking today, the market keeps ticking down and down and down. And I view these things as kind of like a big boat, right? Like, so the boat goes and it's streaming down the ocean and it's doing great. And then somebody has to put on the brakes and turn the boat around because there's a some sort of barrier in front of you. It takes a long time to turn the boat around. And so once these cycles happen, right, and they are cycles, you have a situation where what stops it? You know what I mean? Like once people are asking for their dough back, I don't think a lot of these funds, continue to roll by raising more money, right? It's kind of like, oh, everybody's trying to get out. You're certainly not going to have a new one because people are trying to get out of these things. And, the old adage too, which happens every time there's a big, big disruption, and they're all intertwined now, right? Wall Street, banks, private credit funds, even though they may be competitors, but they're all, they are competitors to an extent. And that's the old adage on Wall Street. When you get in trouble, now you have to go to your competitor to borrow money. And Bear found that out the hard way. Lehman found out the hard way. Merrill luckily got out of it by jumping into the arms of B of A. But nobody's going to lend them money. You know what I mean? Like, if it's really bad, it just plays out, right?
And they're gonna set up funds to buy the assets at 50 cents on the dollar.
That's it. I was just going to say our good friends in Vulture Land have already stated their intentions, and those prices have only gone closer to their bid since they've stated that they're willing to buy stuff at 75 cents on a dollar.
Right.
And, if you keep having these situations, I don't think it's wrong to be concerned. And nobody knows where, like you were talking about before, like the guy sitting in an office who has thousands and thousands of loans. How in the hell does he know how every company is doing that he's loaned money to?
Yep. No idea. Yeah, that was my thought, was that the crazy thing is that while the banks, the big commercial banks in general, got regulated out of that middle market lending, which is that's totally what private credit does in all different sectors, not just software. And they got regulated out of it, so that's how private credit kind of got into the breach, which for a while was fine, right? It was putting capital in it, but the banks, according to Moody's, the banks have lent to private credit funds. So, like, think of Blue Owl and think of Area, all these. So they've lent to the funds. So they lend to the business development company, and then the business development company makes these loans. So that's the. They have about 2 times leverage, or 50 equity, 50 loan. So they just basically took a step back, even though they probably thought the same thing. And I wrote this in the piece. I said, somebody there with gray hair remembers what middle market lending is, right? And it's very difficult, and you have to know everything about that company. You have to know the management. You have to know their competitors, their suppliers, their consumers, and you have to keep the value of the collateral, and you have to keep such a laser focus on it that why would these guys do this? Why would they have to know? Again, and it's not even, I'm not knocking the 35-year-old dude sitting in, or gal sitting in the city, New York City, doing these loans. They're probably really smart, but there's no way they could underwrite all this stuff properly, surveil it, be there to head off a problem before it really gets bad. No way. And that's why I just feel like this is it's just a disaster. I would say waiting to happen, but it feels like it's kind of happening.
Yeah, it reminds me too a little bit back in the day when the great financial depression of 2007 to 9. They talked about how, like, this was how Jamie Dimon's star continued to rise, because the big problem in the financial crisis then was the mortgage-backed security market, housing market, what have you. These companies were in big deals with the securitization companies that were providing these loans, the companies that actually securitized New Century, all in the south of California. These guys would go and give these lending loans that were liar loans and all that stuff. And the banks would securitize them and sell them off to the unsuspecting public. Then when this music stopped, the banks were long a ton of this product, ready to, make it into the sausage factory sausages and ship it out. And they were stuck with it. And they all talked about how, like, JP Morgan, right as soon as everything was breaking out, JP Morgan escaped by not being involved. What a brilliant call. And that was a bunch of horse shit, because they were trying to get in.
Right.
And they were actually about to get in, and the music stopped, and they're like, woo,
right.
Woo,
I heard the same thing.
We made that.
Yeah.
So, like, that was a complete, but I'd love to know, like, we will find out, right? We will figure this out if there really is a big shit show here. Who is the guys or gals who have missed this? Meaning, right. Which bank said, nah, we're not doing this. Whereas we know plenty of banks that are way involved in this private credit stuff.
Well, Eric, you wrote Wells Fargo is the biggest one. It just, of course.
Right. They're the new Lehman Brothers.
Yeah,
and B of A too, right? B of A is involved, right? Who was he referring to? Right? Jamie Dimon said the other day, like, some of our competitors are doing stupid things.
Right.
Was he talking about Wells, or is he talking about B of A?
Well, the only problem is that I read that JP is going to put more capital. Now, I don't know if they're going to lend to the business development companies. Maybe they're kind of thinking of jumping back into the middle market stuff. But
Right.
I'll tell you that. So Wells came in first with 60 billion. Um, Bank of America is second, coming into the silver medal with 33 billion. This is as of the end of it's October 2025. So assume uh, quarter end September 2025. Citi 26 billion. JPM 22 billion. Goldman 22 billion. Oh, sorry, PNC, Richie.
Oh, that's
Billy
unlike
D.
Billy.
That's your guy. 30
Yeah.
billion. I'm sorry. PNC actually takes the bronze medal, I think.
Wow.
Morgan, 16 billion, Truist, 19. They're all involved in this. And I have not heard the Fed say one peep about any of this. Now, these are big numbers. They're not going to blow the banks away like in 2008, I think. But there's some huge freaking numbers, and I don't understand the logic other than like you said, because I heard the same thing. I had a guy, he was pretty high up at JP, and he told me in like '09 that he goes, "Oh, we were trying to get in, we just kept tripping over ourselves and screwing it up, and we just lucked out." Like
Yeah.
you remember Stan O'Neill? You remember what because Merrill tried to do the same thing, right? And the only problem was they succeeded. Like I think Stan O'Neill wanted to get in, and who was the guy? Really bright guy. He said the train's left the station, guy. Like now is not the time, and he got booted out. And then the new guy, whoever came in, was like, "I'm going to do whatever the boss wants." And that's a remember that they bought First Franklin.
Right.
They paid like what was it like 1.3 billion for First Franklin. It was probably the third biggest subprime. Uh,
Right.
and I think by March, they did it year
It
end,
was
right
like
around the
worth.
end of 2006. And by March 2007, they were gone.
Yeah, it was like worthless in 6 months.
Oh, Jesus.
So yeah, but I don't think and the other thing too, like if you look at it from an equity valuation kind of thing, there have been some pretty good arguments with like guys like KKR and even Al and Apollo. Some of the big guys, Blackstone. They talk about how, and we've lived this movie. They talk about how yeah, but the stocks are so cheap. They've been clearly throwing out the baby with the bathwater. Blackstone's got business, BlackRock's got business everywhere. This private credit stuff is like 2% of their business, and the stock is going down 30%, right?
Yeah.
And then the music really stops, and people go, oh, these guys have to pony up dough or something. And what else is behind door number two? And it turns out not to be a cheap value play to buy Blackstone or KKR, even though it was only 2% of their business, because now there's leaks everywhere, right? It's contagion, right? It's contagion.
Right.
It's like
But on the other hand, I mean, this is a type of stuff that hasn't been allowed to happen since 2008, and you need that creative destruction. You need to get rid of the bad credits in the system, and so yes, hopefully this won't be systemic to the point where there's the Fed has to step in or Congress has to step in. But Berkshire is sitting on what, $285 billion in cash or something crazy like that.
Yeah.
And
Yeah.
you mentioned some of the other vulture investors who are, standing by. They're not going to, buy up at these levels, but there is a bid there. And it'd be healthy if some people got wiped out, frankly.
yeah.
And those vultures are pretty good at tipping things over when they need to. That's the
Yeah.
other thing.
Yeah.
They may accelerate the process.
Well, it's obviously with all this Iran stuff happening at the same time, that's not great.
No, yeah, we'll segue into that because again, it's like I think there's another article, but we'll see if it comes out of monkey business or racket. The fact that this there were problems, there were cockroaches before the war, right? I mean, we weren't even looking at software. We weren't talking about the software apocalypse. We didn't even know it existed. But we were looking at the fact that they've leveraged up so much of middle market America, middle market corporations or companies that it's not going to take much of a downturn to really start pushing guys over. And I've talked to friends of smart people, and they still believe it. Yeah, but most of the loans are probably good. And my question is, well, how on earth do you know what's good and what's not? Maybe the original loan was good. Like Kevin owns a business services company that does all the HVAC and stuff for these 20 commercial properties in this area, makes a lot of money. Private equity comes in, buys Kevin, private credit comes in, basically providing the leverage. And then they say, Kevin, we should really roll up the other five of your competitors. Let's start aggressively going after them with debt, right? And so what I'm saying is, like, the investor who may have said, yeah, I could see that would be a good loan, lending to that guy. Not that they have a say in it, what I'm saying, but this is the point. From that point on, how do you know what has happened with that company and what they've done? You don't. I mean, the portfolio managers does, but I don't think anybody outside of that does. And so you have no idea really what these loans are, what they're worth, and what the risks are in these portfolios, I think.
Yeah.
Yeah, it's all black box stuff, right? It's
Mhm.
like, back to my CLO days, same thing. I mean, they would require, right, as a CLO manager, they would require diversification. So the ratings agencies would have all these models that said, this company fits in this block, that's good. Oh, you have too much of this, you can't buy that, right? So it was really like a map that was already created for us in constructing these portfolios. And so sometimes they'd be like, you need, pick an industry. You need some of that. You don't have any of that. And I'd be like, yeah, that business sucks. Like, I know that business sucks. And then it was kind of like, well, you want to do a deal or not? Like, you got to pick one of these four names in that shitty industry. And you, like, basically, pull a number out of a hat. Like, it's like, and like, if there's going to be trouble, it's going to start with that, right? And these guys all know this too, right? Like, it's not like the game, the name of the game is speed, right? So, like, they're constructing these private credit portfolios, but they want to fill them up to get the biggest bang for their buck. They got money to put to use. So I know the game and I know what these guys are doing, and they're just like, all right, screw it. Like, we're ramping up. We have 3 months to go to get it full. Let's just go. And that's what they're doing. And they all do the same thing, right? So it's all like, so if one of them, that's what Jamie Dimon was referring to as the cockroach, right? So if all these guys are doing kind of the same thing, buying in the same industries or similar industries, maybe not the same companies in those industries, but similar, and the shit really hits the fan, then they're all going down. Like, it's all going to happen at once.
Oh, you think, I know, because it's funny. You think about it and you're like, all right, these guys, they're not niche players. This is big money, right? So like you're saying, Richard, they got to buy, right? I guarantee you that they're both in the same area bidding for the company to take the loan from them with less covenant. Like, I mean, they're basically going to be aggressive and say, hey, come with us because we're going to cut the rate by half. Instead of 7%, it's going to be 6.5%. Instead of we'll loosen up those covenants. Those guys are going to do. So it becomes a race to the bottom, and we've seen this so many times before. It just keeps playing the same song over and over again.
Yeah, and again, it works great if everything's moving nicely.
Right.
When the music stops, it's pretty quick down.
All right. Well, let's get the music starting again, because we think in these times, our best value besides being funny guys is to give you a place to hide in what's happening now with the war and energy and inflation and rates, and we're looking at potentially a stagflationary environment where do you hide if bonds are going down and stocks are going, all risk is going down, and the stuff you'd normally flee to is going down as well. And Kevin, you have some great from your emerging markets experience. You've done some good work on this, and tell us where a potential place to hide is.
Yeah, I mean, I certainly would not pretend to have insight into what's going to happen and how the Iran situation is going to resolve. But for people who are worried that it's going to drag on and that oil prices are going to stay high, that the Straits of Hormuz situation is not going to be resolved, then I think a pretty good, maybe the certainly one of the best places to hide out is Brazil. And Brazil has a lot of things going for it. It's a big energy producer, a big oil producer, so it's a net exporter of oil. Its electricity, it gets 90% of its domestic electricity from renewables. So, lots of hydropower. So it's not negatively affected by this the shutdown of gas exports from the Middle East, like Europe is and like Asia is. And so they should be in pretty good shape. There's a presidential election coming later this year. Countries tend to do well in presidential election years, as we've talked about before, as the powers that be try and make things look good headed into the election. And it's, also from a geopolitical perspective, if there's war in the Middle East. There's war in Europe with Russia, Ukraine. There's worry in East Asia. Is China going to take advantage of this situation? Well, South America is about as good a place as to be to hide out from all this. Brazil's not going to get dragged into any of these situations. Brazil's not going to have to increase its defense spending. Like all these countries throughout Asia, Europe, the Middle East, and now the US to replenish. So it's just all these macro factors. Brazil looks pretty good. And frankly, it's also relatively cheap. The market as a whole trades at a price earnings ratio of 11. That compares with the S&P 500 is around 26 right now. Now it's an emerging market. Emerging markets almost always trade cheaper. So, but also the dividend, you are earning a 4.25% dividend yield from Brazil right now, whereas S&P is at 1.2%. So it's
And
cheap. It's
that's on the ETF, Kevin. What's the ticker again?
EWZ. So Edward William Zebra. So for US investors, you can just go in your brokerage account and buy that ETF, and that gives you the broad country exposure. So
Cool.
it
How's the
looks pretty
currency?
good.
How's the real been doing? Has it been?
I haven't looked at it since the war started, but it's the market has outperformed
Mhm.
emerging markets. It's outperformed developed markets. It's outperformed pretty much everything except for oil this year. And it has a current account surplus. So it's in decent shape right now.
Mm.
So I wouldn't bet the farm, but if for those who are worried about the global situation, Brazil's got a lot to recommend it.
Yeah, it looks like the real's hung in pretty well since the war started, which
Yeah,
probably.
as you would
And
expect that. Mm.
and Bitcoin has as well, which has frankly been a surprise.
Yeah,
Bitcoin has outperformed gold since the war started. Bitcoin's
yeah.
outperformed the S&P, and I have zero insight or anything intelligent to say about why that's the case. It is. And unlike, Brazil, you could justify why it should outperform in as the scenario that we laid out. I can't give you an argument why Bitcoin should continue to outperform as the world falls apart. And apart from just people look for alternative stores of value, but gold is down, which is
Hmm.
frankly surprising. I wouldn't have expected that. So
Yeah.
there we are.
So, some of it probably has to just do with the dollar, just that the dollar surging up, so gold down. But that makes Bitcoin not folding up like a cheap lawn chair, like I think we were worried about when this
Yeah.
first started. I'm like, oh God, we're going to 50. But
Yeah, I did too.
yeah, the fact that it's held in as the dollar's been rallying is it's pretty impressive. Um, cool. So there's a good idea. Richie, you're always full of ideas.
Yeah, I keep harping on this RSP, Richard Sam Peter, the ticker for the equal weighted S&P 500, and that's still kind of hung in, like it's flat, as of today, I think with dividends. Um, Whereas like the S&P is now down like 4+ percent on the year. The Nasdaq's down like 6% on the year. Dow is probably like 5-ish.
Hmm.
So, you know, if obviously if there's a recession that happens off this, I mean, there's a lot of mixed reviews and insights. I saw something today, if like somebody came out and said the only way we get into a recession is if oil goes to $138 and stays there. You know,
Right.
yes or no,
Thanks.
maybe. But I think if it stays like this, $100 ish oil, you could have something bad in the next 3 to 6 months, right? It certainly could
Hmm.
happen. So that makes it tougher for any place to hide. I mean, what you're looking at that point is just trying to, people like to beat the index.
Hmm.
It's wonderful to beat the index, but if the index is down 20 and you beat it with something down 10%, are you really thrilled? I mean, you're like, "Hey, I won." I I'm usually looking for the return of my money, not so much return on my money, right? So like, there's if there's a recession, there's very few places to hide. But I think
Hmm.
the it's had a bit of a hit too because of I think it's a lot of the consumer staples companies have gotten hit too because people are scared about recession. But there's another ticker called Noble, Nancy, Oscar, Boy, Larry. And its ticker is Noble because it's the ETF of the dividend aristocrats, which I think we've talked about.
Oh yeah.
So these are companies that have either raised, I think they've paid and raised at least by a penny every year their dividend for 25 years. So these are like your solid companies that make dough, and they like to be on that list, right? For many reasons. So they
Right.
do a lot of things just to make sure that dividend keeps flowing, unless they certainly can't. But
What about food commodities? Like, or how
yeah,
about Conagra?
yeah. I mean, again, that one's gotten hit. Like
Yeah.
if you look at I think it also has a lot to do with their packaging, which is crazy. Like Campbell's soup. I know the people, they live not far from here, the family. And like Campbell's soup, people are still buying soup, but they're talking about the price of the cans, like
Hmm.
the tariffs and all the on the aluminum,
Right.
right? So like the can price went up because their margins are tight to begin with, they're getting smoked. And it's like, damn, like people are still
Right.
buying it, but like I don't know how you fix that, right? Like do you put them in paper bags? I don't know. But so it's weird, but I would think those companies are good, right? Like they're going to figure it out. Yes, um, people are looking in these stores, in these grocery shops, like the more private label stuff, like the home brand, like Walmart's got a big one, Kroger's got a big one. All these places have big, similar products. They say it right on the label, compared to the household brand that you know and love, and they're cheaper, right? So if that
Yeah.
continues to go, then these food companies will stay down. But I got to believe some of these pop up again. Like I get it. Like they're scrambling, and it's not helping them with this Ozempic stuff, right? Like
Yeah.
Mm.
like people are eating less bad apparently with the taking the shots and not being hungry and losing weight.
And drinking less too,
Yeah.
which is disturbing.
Yes. The bourbon business is in like dire
Oh,
straits.
yeah. Our
Like
friend
That
Whiskey
that
Dave has been, I mean, they've just gotten pounded because like they first they have a lot of deals with Canada.
right, Canada's like
Um,
on strike, right? They
yeah,
boycott.
Canada just like get all your shit off our shelves, literally was what happened.
Yeah,
And then the tariffs over in Europe, and now the whole dynamic of kids are eating gummies and taking vaping. Kids haven't stopped getting hammered. They're just getting hammered with different stuff.
yeah, different way.
Um,
mm.
It's probably better for them in the long run. Well, yeah, because I was thinking about and again, you feel terrible even thinking about this, but you got an investor, you got to hide somewhere, and the price of diesel fuel has gone through the roof already. Again, a third of the world's fertilizer goes through the strait, and they say that the fall, it's planting season now, and you know, Big Agra is going to be like, hey, you know what? It costs more to run our machines that are outside. I'm assuming their harvesters and things have run on diesel. We gotta ship it once it's done, and the price of fertilizers has gone up. However many should be skyrocketing. So all that has to equal higher food prices, which you get higher gas prices and higher food prices. I mean, who the hell cares what anything else is? That's really going to hit hard. So
Well, and now they're talking about after the latest Fed meeting, potentially rate hikes
Right.
instead of cuts. The odds for a rate hike went up from I think something like 8% to 25%
yeah.
after that presser. So
And just today, right? The 10-year note is up
Oh
10
God, it's
basis
up
points.
14%. It's up 14 bips today.
14. Yeah.
Yeah, it's getting slammed. Yeah, and you heard it first. Let's get to the Fed here because you heard it first here on Monkey Business that we said that Kevin Warsh may be in for a little bit of a problem because Jerome Powell, he's not leaving. He's basically said like, all right, well, I'm not going anywhere until this investigation is complete. I don't. He's like, I'm not stepping down. I'll be I guess I'll be the chairman emeritus. But he's also saying, look, my term as a Fed governor expires in 2028. I might just stay here until 2028. How do you like that? So, I think we talk. It has nothing to do with Kevin Warsh. I think Kevin Warsh I'm sure he respects him and thinks he's a good pick, but he's not going anywhere until this thing's over, and it can go on for a while. Especially because now he's needling Don. Right now he's like, kind of, basically that was the most forceful you ever saw Powell. He's like, I'm not going anywhere.
And
And
he kept saying, as is the law, as is the law. And also he said, as was with me. So I guess the last time when he got on, there was a delay in the confirmation.
mm-hmm.
So he didn't get to take his chairmanship until months later. So like he was basically saying, I got delayed. So this guy might get delayed. It looks like he's going to get delayed, and I'm staying. How do you
Well,
like
yeah, and that the senator from North Carolina, his
Lewis?
name, yeah, he said, remember, everyone forgot about this. He said, there's not going to be any confirmation until this thing's over. So if you want to do that, that's fine, but it's going to be 12-12 when the Senate Banking Committee meets on this and basically decides. So there won't be any confirmation. So, and again, like this was had to be one of the biggest unforced errors I've seen in a while, where it just the guy he was leaving. He's out. You got rid of him. You got your guy, and he just had to do what he did. And it's tough.
Yeah.
All
wow.
right. Well,
Let's something more positive. Richie,
yes.
March Madness. You
The
got some
madness is
gems
here.
for us?
The madness is here. Come see it. Remember, Eric, at Old Shea back in the 80s, they had a big banner at Shea Stadium during the winter before the season. The magic is back.
Magic is back.
Come
Yep.
see- And they proceeded to like lose every game.
Well, if you remember, the first time they put that, it was like 81 or something. They were horrible. And I think Sports Illustrated took on the front page of Sports Illustrated was a Shea, and it said the magic is back, but they like turned around the C and the K or something. Or maybe the C and the K was kind of falling off the banner.
Yeah, fabulous. Yeah, so we got some good stuff going on today, tomorrow, Sunday. We're down to, I guess, 48 teams now. There'll be 32 after this afternoon and evening. Pretty exciting. Not a ton of upsets, as I probably surmised a bit. there's a lot of chatter around college basketball being ruined due to the NIL money. So you could follow that. That makes a bit of sense, right? So now these guys don't have to worry about transferring and sitting out a year. Not only they get to transfer and play right away, they get paid. So any guy who's decent on a mid-major team can get scooped up by any of the big guys in a minute, and it happens all the time. So what you have is a big talent dump from the mid-major that had one or two guys that were great that are no longer on their team anymore, and they're on the other team. And so it tends to lead to a lot of blowouts, which for the most part happened yesterday, except for Wisconsin, they lost. So with that thought, the University of Connecticut plays tonight, and I'm not a guy who likes to lay a lot of points in a basketball game, but Connecticut is 21-point favorites over Furman. And the record for Danny Hurley as the coach of UConn, he has covered, which is insane. In the NCAA tournament, he has covered his last 14 games.
Wow.
Spread. So even when they lose, they're losing by 2 or whatever. And they're only losing when they're underdogs. So they lay 21 tonight. I'm going to take UConn for sure, just to see if they just blow him out. He's a bit of a hard-nosed guy, so he probably puts the pedal to the metal at all times. So UConn. Also, the Miami, Florida basketball team seems to be getting overshadowed by the Miami of Ohio basketball team. Miami of Ohio went 31-0 in the regular season, then lost their first conference tournament game, which scared the hell out of everybody because they thought, oh my God, these guys are 31-1 and they're not going to make the tournament. Well, they did. And they won. They were one of the last in. So they played in that first 4 the other night and they won. So now they play tonight. But I'm going with Miami of Florida, who plays Mizzou. They're only laying 2 points, but that's because the game, I don't know how they do this or get away with this, but Mizzou is playing Miami, Florida in St. Louis. So you would think there's going to be a lot of Mizzou fans there. But I think Miami's a pretty good team that can, really play good defense. I like them. And then we'll go with one tomorrow because it's already been determined who's playing tomorrow after last night's games. And let's go with the VCU big team, the Virginia Commonwealth. They pulled off the upset, which really wasn't an upset if you look at the point spreads. They beat North Carolina yesterday, so a bigger name team. North Carolina's best guy is out for the whole tournament. But the point spread was 2. So Carolina was favored by 2. So I figured VCU would be in there, although they were way behind and they came storming back. But tomorrow they're against Illinois, who's good and clocked Penn last night. But the point, I looked at the early line. It looks like Illinois is favored by like 12 against VCU. So I'm going to take the dog. So let's go with UConn, Huskies, Miami Hurricanes, and the VCU Rams. I think they're the Rams. Those are our 3 wonderful 5-star locks.
So where do you get this? We have a great emerging market ETF pick. We have three March Madness picks, and
it's a diversified portfolio.
Excellent. All right, guys, good stuff, and we'll see you next week.
Be safe.
Next week.